How big are you anticipating the stablecoin market will get, and how does that translate to Treasury demand?
Yeah, thanks again for having me. You know, it's an enormous victory today, and it really sets the stage for us to demonstrate our leadership when it comes to financial innovation. Because what this bill does is it says if we modernize the payment system globally, we now have a digital asset that has rules of the road established by Congress for what backs those digital assets. It provides enormous amounts of confidence to not only Americans, but our trading partners around the world who are then willing to make exchanges, to invoice in dollars and then be paid via stablecoins because they know that it is an asset that has value behind it. Because what is it that backs it? Primarily, it's going to be T-bills. And so if indeed it's the case that this expands even further the portion of international trade that is invoiced in dollars and then allows for nearly immediate payment. So, you know, think about it right now. When a lot of these payments are made, if you wire money abroad, you know, it can be 24, 48 hours between when that's initiated versus when the money is received. If it's done on a blockchain, on a distributed ledger blockchain, it could be minutes, if not seconds. And so it's going to enormously hasten the time frame for making payments. It's more secure. It's more private. It's significantly cheaper. And so if indeed this does revolutionize the way that international payments are invoiced and paid, then there should be a flocking to this technology. And if all of that trade, therefore, is even further denominated in stablecoins, then there's going to be demand for the underlying assets, which are Treasury securities. And we could potentially see on the order of trillions of additional demand.
So if there is this trillions in additional demand and you have stablecoins backed by Treasuries and there's a mass redemption event, doesn't this create some sort of financial stability risk?
I would say the exact opposite, because, you know, you look at treasuries, as treasury bills in particular, as being the most liquid market, the most liquid asset in the world. And so, you know, even when we've had times of stress, we know how to make sure that the Treasury market operates. So that's one thing. The second thing is, because of this legislation providing the full understanding of how these things work, providing, you know, legislative structure to them, if anything, it should reduce any kind of run risk against this asset. So we actually think that this creates a more stable environment for payments and should mitigate any concern about there being a run on the dollar or on treasuries.
On concerns around the crypto markets and specifically President Trump's ties to them, I don't have to tell you that ethics concerns have been raised for the ties that both he and his family have via World Liberty Financial or their own meme coins, et cetera, to this market. How should Americans think about the degree of confidence they should have that regulators in this administration and Republicans within the president's party are making the best choices to make sure this is secure for them financially, and not just that it provides some financial benefit to the president's interests?
So, number one, I would point to the fact that this legislation in both the House and the Senate got a massive bipartisan majority. So any notion that the Democrats would sign on to a bill that is somehow going to make it, you know, easier for the president to generate wealth for himself, I think is belied by the fact that we got such strong Democratic support. In fact, what it does is it recognizes that by putting in statute a framework whereby people can, with confidence, engage in international commerce and know that they are receiving a digital asset that's backed by underlying securities that there is faith behind, that you have, you know, the full faith and credit of the federal government behind. If anything, that should bring enormous confidence to the American people that they should indeed consider moving some of their commerce onto a stablecoin-backed platform by which they make payment.
We also want to ask you about another top story here, of course, which is the Federal Reserve. And we'll get into the implications for Chair Powell. But you heard Chris Waller. They were saying that he could dissent if the FOMC does end up holding rates steady in July. Can you give us your perspective on the difference between cutting in July or waiting until September in terms of the economic outcomes?
Sure. So, you know, I have to tell you, I was sitting there listening to your reporters report and Kaylee asking the question, you know, you took away my talking points on it because you listed off all of the economic news that has come out. If you look at the CPI number that came out this week, the PPI number was flat. We've got strong retail sales. We've got growing consumer confidence. we're in the process of implementing the tax bill, which is going to be expansionary on the supply side. We're engaged in a massive deregulatory effort. All of those things combined should reduce pressure on prices, reduce inflationary pressures, and yet we're not seeing the Fed, reevaluate with any kind of haste whether or not they come in and start lowering interest rates. And again, obviously that is ultimately the decision for the Federal Reserve to engage in. But as you compare our economic environment to our partners and allies around the world, our economy is performing well. We're not seeing inflation, and yet our interest rates are significantly higher than what you're seeing among our peers. And so, as we have said before, I think there is a case to be made for the Federal Reserve to get off of this wait-and-see approach and instead act on the data that they say drives their decisions.
But even if they were to pursue a cut, they may be able to impact rates at the short end of the curve, but not necessarily at the long end. If there's a credibility question that's being raised as to whether or not the Fed is going to be able to maintain a focus on inflation under political pressure to cut rates, if they actually cut rates, do we not have a problem potentially where you could see long end rates actually moving up, potentially having the adverse effect that the president wants to achieve, which is lower mortgage rates, for example?
So You're right that ultimately the objective is to also get long-term rates down. But the reason that long-term rates went up so much is because the Fed waited so long to raise interest rates 4 years ago when inflation was apparent, because you had fiscal policy that was stimulating demand and constraining supply. We have the exact opposite going on here. Right? What we have going on is we are expanding supply such that you can better fulfill the needs of the American people by bringing more products and services into the marketplace. So as we continue to implement our deregulatory agenda, as we finalize the rules on tax reform, as we address these international negotiations that are going to provide certainty and clarity on tariff rates that are going to be imposed, all of those things should provide confidence and increase the amount of supply that's coming into the economy, and that should be disinflationary. And so ultimately, once markets recognize that the great economic data we're already seeing is part of the beginning of a trend, I would hope that markets see that it merits both shorter and long-term rates coming down.
I'm glad that you brought up tariffs, because we do want to ask you about some of the timelines here. We're still waiting for sector-specific tariffs. We know that those Section 232 investigations have been launched when it comes to chips and pharmaceuticals. Should we expect these tariffs to align with that August 1st deadline?
So I don't want to get out in front of the Commerce Department and the U.S. Trade Representative who's leading on those evaluations. But I can tell you, and the president made remarks at the Genius Act signing today about still more deals being imminent.
Might you be able to share which ones those would be?
I was sitting right next to Commerce Secretary Lutnick, and you could tell that they were very eager to make an announcement. But you know that I'm not going to get in front of my boss when it comes to making an announcement that hasn't yet been made by the White House. But you could tell that there is some news coming shortly.